This is our Forex blog for June 10th, 2013. And one of the easiest ways to trade with our software is using our currency indexes. And this, at a very glance, lets you see what each individual currency is doing and very key areas of support resistance and what it's most likely to do. For instance, the dollar starts off today, coming into today above its hourly moving average. It acts as support, and once it breaks down underneath there, it's likely to go down. When it finds resistance right here and breaks out, it's likely to go up. You can see the previous day's high for this index, the yen, previous day's low. Anytime a currency goes above or below its previous day's high or low, it tends to trend, or at least if it does trend, it's going to be a big trend. There are obviously false breakouts below, and finally this one worked, this one here worked. But the key is small losses, big wins. And when a currency breaks out, like the yen, down, and it always is a higher chance of breaking out when it comes down, finds support, comes back up, and the second time down, busts through there. You basically want to sell the yen versus whatever currencies are strong. The euro's going up, it's above its hourly moving average, and it looks like it could break out over yesterday's high. It's a very significant event when a currency is higher today than it was all day the previous day, even if in this instance, it's from Sunday. So what we're looking at is selling the yen versus the euro. This currency is underneath its hourly moving average. The CAD is above its hourly moving average, but it's been going sideways. If this one ever really broke out over its high, it's very likely to explode up, because anytime that you see a currency in a very narrow rectangle pattern, it's very strong. This lets you see the daily and weekly trend underneath here, and you can put the monthly trend on there too. This one, for instance, is above the previous day's high, but the weekly and the daily trend are pretty weak, so it's less likely to explode up. In this case, it does, and you can certainly trade it, but you know that you're fighting the longer term trend. So let's go back and again look at buying the euro yen after 4. This is one of the higher probability trades. It would have been better if the euro was above its previous day's high, but you can see at 4 o'clock right here, this one is busting out through its high, and it goes up about 50 pips, and our perfect oscillator is showing an extreme value, so it's likely to either go sideways or pull back. It does pull back. You can see it hits the lower Bollinger Band on our perfect oscillator. It's a pretty high probability place to get in. Same thing for this little pullback. And when they hit the upper Bollinger Band, and especially the plus 80 level, it's an extreme. It's likely to kind of run out of steam and pull back. So that's what happens here. If you got into a little pullback trade right here, you can see it went up about 15 pips. Maybe you didn't make any money on that. Maybe you just broke even or made 3 to 5 pips, whatever. Made a lower low. This area right here, if you notice, when you know the direction of the trend, buying at the lower Bollinger Band or the minus 80 level tends to cause reversals. And you can see up, kind of slightly up, right here and here, a little bit of an up move, and 25, 35 pip up move at the end. But the whole concept is being in the currencies most likely to trend, and you can very much see what the trends are. You can use all of our drawing tools on here. For instance, our trend channel. Oops, let me do that again. When you draw a trend line off the lows, let go, and you project it off the highs, this is something that you can use to project and predict where profits are going to be, and it also allows you to buy in the lower quadrant. When you see a trend that's going up like that, you want to get in on any pullback to the lower quadrant and get out at the upper quadrants. And this last trade right here only went up a little bit, and once it breaks through the trend channel, that trend is over. But you'll be surprised how many times that it gives you 1, 2, sometimes 3 pullbacks once a trend channel has been identified. Sometimes trends last for days, and you can use those channels as very high probability places to get in and out of that individual currency. For instance, at 6 o'clock right here was the first decent kind of pullback. So again, the only downside is the daily trend slightly down still, the weekly trend's looking weak, but a trend like this is likely to go up at least one more wave, and it's going to run out of steam at some point. And knowing that the longer term trend's down, you can also look to do counter trends at the upper quadrants, and some of them are going to work and some aren't. For instance, this one right here pulled back a little bit. You could have made a little bit of money. It went above the upper line and then back in it. And you got short right here, and you pretty much nailed the reversal at the ideal time. It kind of went down, up, didn't break that high, then fell the rest of the day. Knowing the longer term trend helps immensely. But again, let's look for this buy right here. Which currency is very weak, likely to go down? Well, the euro's breaking out above its previous day's high. Its longer term trend's up. The pound is underneath its hourly, so it could very easily go down, but the longer term trend's up. This one's trending up. The Australian's just kind of gone sideways all day, and the longer term trend's down. So at 6, you could be selling the Australian New Zealand. This one's probably more likely to go down, and this one's trending up. It's above the previous day's high, and this one's nowhere near the previous day's high. It's underneath the point of control, the position price from Friday, in this case, where most traders have positions. So anyone who's long from Friday is losing money. You know that. Or I should say most people are long from Monday or Friday. So let's take a look at the Australian New Zealand. It's 6 o'clock. This is let's go back and make sure the time right here. 6 o'clock. Yeah, this one's pretty likely to go down. And it does, but not as many pips as anybody would like, myself included. But it did fall 15 pips right there. And it was very easy to predict that at 6 o'clock. And that's, the whole aspect of this is the anticipatory nature of it. The pound is underneath its hourly, coming back up. It's likely to find resistance here and go down. Unfortunately, the longer term trend is up in this one and down in this one, so for that reason, it's not the best trade in the world. But pound New Zealand at 6 is likely to go down. And you can see it certainly does. It's very predictable, and it goes down a whopping 50 pips. And then it gets another pull back up. Notice above the upper Bollinger Band, you get short here, another 50 pips. So you can use these in so many different ways. You can, for instance, draw Fibonacci areas on it. Let's say the Swiss right here, you draw the fibs from this first move. If it makes its way to the upper fib area, which unfortunately it doesn't, so we'll redraw this from the down move right here. From that upper area to the low, let's zoom in on this a little bit. It's likely to find a little bit of support here at the 1.382 fib target, and especially the 1.618 a little bit lower. So which currency, this is likely to make a bounce up, which currency is likely to go down. You can see the yen's still weak. Once this finds support and starts to go up, right around 9.45, trade it against the yen. Swiss yen after 9, we're looking for buys. And it always helps when you look at the chart and you see that it's kind of been, pulling back. This one kind of went up and it's just been going sideways right there. A little bit after 9, we're looking to buy the pullback. It's very close to the lower bands, which always kind of, or most times, give you some kind of a bounce here. And even though it doesn't look like the biggest move in the world, it's a 25 pip move, and if you held on for another 2 hours, it went up another 25 pips. So the whole point is you can use this to anticipate future price moves off of fib levels, trend line breaks, all kinds of things like that. For example, the euro, it's been trending up, comes down, false breakout, draw a trend line underneath this area right here, and once it breaks that trend line, it's likely to go down, even though the trend is up for the day. 7 o'clock, which currency is likely to go up when this broke the trend line? This one's above its upper channel, so I wouldn't buy that. The CAD's looks like it had a false breakout underneath the low, and if it breaks out over the hourly again, it certainly has room to run to the upside. Also, the pound just broke out, so I would look at around 7:30 to sell the euro pound. And it might be a little bit before 7, but on the next pullback up, this hits the upper quadrant. And notice this one's above its hourly, so it really doesn't appear that one worked. You did get a bounce to the plus 80 level, which did cause a big move down, and also here and here is very close to the 80 level, all moves down. Let's take a look at what happened in the future here. The pound had already shot up for about 20 minutes. The breakout actually happened a little bit before 7. So if you go back to that chart, you'll see the move kind of happened a little bit before 7, as you can see. It only fell maybe 10 or 12 pips. Here are the Swiss. Trend was down earlier, it made a move up. You have a nice little trend line off of this. You know, it kind of moved up, pulled back, found resistance, 630. Sometimes you get ones that are breaking down when another one is breaking up. Yeah, in this case you don't really. Let's go a couple bars in the future and see which ones take off. You know, when this one's breaking down, you already know the strongest one. Unfortunately, it's kind of right near its upper quadrant. The New Zealand Swiss is very likely to go up at 630. It was probably a little bit before 630, but you can see it made a move up, pulled back. Notice the lower, the perfect oscillator is at the lower band, pretty high probability place, and again shot up another 20 or so pips. And anytime you buy these pullbacks, let's say you're long right here, your stop is a pip or two underneath the low. This is your risk. And the whole reason why our currency indexes in the past, for the last 7 or 8 years, we use currency meters that didn't let you see the actual individual currencies. The reason this works is it's very highly accurate, and it works way more than it doesn't work. And when it does work, it tends to give you many multiples of what you lose when you're wrong. So if you lose $100 when you're wrong, and you're making $250 to $300 when you're right, and it's more than some days probably 45% accurate, and some days 85, 90 on super huge trend days, you're going to have much bigger wins and losses. And that's the whole key behind why this works.